All right. So, welcome back to the Community Game Plan podcast. And today marks a fresh start and the launch of season two. This season, we're going to go deeper, not just into what's happening in our communities, but into the people, the ideas, and expertise behind that work. You'll hear our regular full episodes plus our new mini pods coming each month. Focused conversations with experts who help shape the communities we live in. Because community doesn't just happen by accident. It's built by people who show up, challenge the status quo, and do the work when no one else is watching. On the Community Game Plan, we have real conversations with the people shaping our communities, what's working, what's broken, and what's actually needs to change. Hi, I'm Eric Holman, and I'm part of the real estate team at eXp Realty and one of your co-hosts for the Community Game Plan. And on today's mini pod, our first ever, we would like to welcome Danielle Hardie with Premier Mortgages. And today we're going to talk a little bit about the Mortgage Plus improvements and secondary suites in HRM. So let's get into this, and welcome to the show, Danielle. Your first time with us, so can you give us a little introduction about yourself, and then we can dive right into this.
Sounds good, Eric. Thank you for having me. I look forward to talking about this program because I don't think a lot of people know about it. I am from Nova Scotia. I have lived in HRM my whole life. I've been in mortgages about 25 years. I worked at one of the banks for about 18, and then I've been a broker on my own for about 7, 8 years. So I'm excited to talk about this with you.
Excellent. So, like you said, we're going to talk about Mortgage Plus improvements. So, can you give us kind of like, the English layman terms of kind of what that means? Because as you said, a lot of people don't even know that they have a Mortgage Plus improvements options when they're looking to get a mortgage on a new home.
Exactly. So the way that this program works is that you are limited to the amount that you qualify for. So let's say somebody qualifies for a purchase price of 500,000, but maybe they don't want to spend that much and they want to keep their budget a little bit lower. Maybe they want to look in the $300,000 range, which you and I know in that price point, are you going to find homes that are perfect and move in ready?
Definitely
No.
not.
So, it works for, a home like that, that somebody may see the potential in it, that maybe they get it for 300,000, but they want to be able to renovate it. And they could renovate it to put a second suite in, which could also help them to qualify for the mortgage because they would have that additional income. So, I mean, it's very specific when we can use income to qualify somebody for this program, but it does give that person an option to receive a rental income if they put in a second suite. So if that person has the 500,000, they find a property at 300,000, they might be able to take about 150,000 to make that second unit with its own entrance, and potentially have a 2-unit home now where half your mortgage is being paid.
Yeah, and like you said, like secondary suites, like there is options. There is, putting a basement apartment in an existing property, or they can actually build, if they have enough land, they could build something separate in the backyard or something else like that, correct?
Absolutely. And there's other programs available as well, for the secondary suite. So, somebody can explore both options of what might work best for them. But we do have this one lender that will allow people to go up to 150,000 to put in the second suite or do other renovations as well.
Yeah. And that's what I'm finding. A lot of my buyers in the last couple of years have been looking for the option of an existing house that they can put an apartment in. The basement primarily is what I most of my clients have been looking for. So that is something I've always brought up is, getting the house and then looking into these programs of the Mortgage Plus improvements to do these renovations. And I'd say 80% of the people I've talked to didn't even know that was an option.
And they don't. And, we tell everybody when you're looking at buying a home that you have the option of purchase plus improvement, but a lot of times it was always under 40,000 or there was a maximum. We never had a lender that was willing to go up to the 150,000 to put in a secondary suite. So it is a great product now for people to be able to use, and it opens it up for people who, because I find we're seeing different demographics of people who are buying. It used to be When I was 22, I bought a house on my own. I was able to. I worked at the bank. I had an income, and a one-person income was able to buy a home back then. Nowadays, we're seeing more situations where we have friends coming together to buy a home, new single moms coming together, sisters, brothers. So, family members, you're seeing, and then we have other cultures coming where they like having, their parents live with them. So they want that secondary suite. So it just provides so many more options for people. One of the trickiest parts with it, though, is because we need all of the quotes up front. So if you're taking someone out to see a property and they're going to put an offer on it, how much time, like, are they gonna have that time to be able to get the quotes and have somebody go in or
Yeah, yeah. I mean, typically what we do is when we're setting our offer dates, once the offer is actually accepted, typically we have our condition period, which is on average 7 to 10 days. So within that 7 to 10 days, that's when we're getting all the documents to yourself for the mortgage specialist to make sure that the financing can go through. But also during that time, we can do our home inspections. We can get those contractors in to get those quotes done. A lot of times it is difficult. Contractors are so busy, but thankfully Jim and I do have a couple guys that we do know that can either do quick drive-bys or can do, jump on a call with us and even a video call. I've had one contractor, I've just video called him through and he was able to give us some quotes that way based on the square footage, what was work was wanted to be done by the client. And he was able to put that in writing within, I think it was 72 hours ish, roughly, of that video call. So there is ways. Sometimes if the seller isn't in a huge rush, but we might be able to extend those conditions to be able to get that information. But yeah, typically when we have the offer in play, we'd have that condition period that we can play with and make sure that we get all that information, quotes done, and then to the mortgage specialist.
exactly? Because that's one of the most important parts with getting the quotes is that we can't just get quotes from anywhere and say, yep, this is what we're doing. We have to stick to quotes that we're getting because the lender and the insurer are approving it and they need to make sure that the value is there with these renovations that are going to be done. The other thing that I should mention is that whatever improvements are done, that is what your down payment is required to be based on. So, if we were talking about a property of 300,000, it's not going to be 5% of that. If you're doing renovations up to 450,000, it will be 5% of that amount, which is going to be
Right.
for the
Which
down.
is important to know for sure.
Absolutely. The other real key part to that for someone who is looking to do this is to also make sure you have money on the side or line of credit or something to get you through the advances because when you're dealing with contractors, you may have people coming in and out, you may have to pay them, but it may not line up with when you're going to receive a draw from the lender. The lender for this type of program will give you up to 3 draws to do it, but that might mean that you still have to come up with money in the meantime.
In between, right?
Yeah, in between the draws. And then once it's all completed, essentially, hopefully the goal is that all the contractors are paid, all of your work is done, and then you have that one mortgage payment. Rather than somebody going, buying a house, moving into it, and then taking on that $150,000 debt themselves.
Hmm. Yeah. No, that's very important, and that's something a lot of people I talk to as well about line of credits, and one thing I always tell them is get the line of credit after you get your financing approved, because we probably all seen that somebody goes out buys the car or something before financing is approved, and that messes up ratios.
You do not want to mess up ratios. It's very
No,
important. Yeah, you want to have that
yeah,
that line. If you do have a line of credit, you want to have it clear, nothing owing on it. And again, it's just really to get you through. At the end of the day, you don't want to have a balance on that either.
right. So any other like important information like that potential buyers should know about those draws? Like, are they set dates or is it dependent on the lender, that sort of thing?
Yeah, you set it up at the beginning of when you're going to have the draws. Like if you're going to request 3 draws, you just let the lender know. And It depends on the amount, but inspections are usually required, which will cost the client money to have the inspection. If it's a secondary unit, it is definitely a full inspection, especially if they're trying to use any income from it, because they want to make sure that it is completed. And let's just say maybe you didn't complete all of the renovations that you had intended to. Well, then the lender will look at reducing the mortgage amount.
Um, so what we talked about draws and the payment plans, but is there going to be any type of timelines involved? Like, is this mortgage plus improvement program, do they have to complete all their renovations within like 6 months, 12 months, or is there any type of plan that way?
Absolutely. And that's a great question because the renovations are supposed to be done within from 120 days to a maximum of 6 months, which in our climate, usually the 6 months would be fine. I'm just thinking if somebody had to put in a septic or something, sometimes you have to be aware of the time of year to make sure that you would have, the time. But in Nova Scotia, I think we'd be fine to get that.
Yeah, and we've definitely run into that situation with um, properties needing new wells or septics, like you said. If somebody is putting in a fully separate secondary suite and they're putting in a full foundation right now in the middle of, well, not, well, we're almost middle of February. It'd be quite difficult to put a foundation in right now. So timing definitely would be crucial for when somebody's looking at doing something like that then. So that
Exactly.
is definitely good.
Yeah. I mean, this is for the person who, and I should also mention, I mean, this program is only for insured mortgages, which means
Hmm.
anything with less than 20% down, but it can be for up to 4 units. So somebody could be buying a 4 unit place, they're moving into one, and so it's an owner occupied property, and they would be able to look at using this program for the other unit.
The other thing too, I mean, property types, like you just mentioned up to 4 units. Um, are buyers do you think buyers are limiting themselves right now, looking at single families versus multi-unit options?
They could be, but it all depends on what somebody wants. I mean, if somebody wants a single family dwelling, not everybody wants to have somebody live with them. Not everybody needs that. Some people are scared if they have that second unit, maybe a family member might move in. They might not want that. So it's not for everybody, but I do think, yeah, people who, especially people I talk to who are looking to buy on their own, they don't have somebody else. I think that this could be a really good program for them because they'd be creating that secondary suite and that income to help support their payment and make their living affordable.
Yeah, yeah, exactly.
And it's not every lender offers this, so it is very select. So you definitely need to reach out to a mortgage broker
Hmm.
to discuss this type of product.
Right. Well, no, that's the thing is, I mean, mortgage brokers have a ton of different products, different companies that you guys all work with versus, the big banks. But um, it is always nice to get that education and knowing all your options versus a single lane.
Absolutely.
So, I mean, in your experience, I mean, you deal with ton and ton and ton of buyers over your years of experience. Do you feel when you've talked to your clients that many people are walking away from homes when they see problems instead of potential?
Yeah, well, I see both. I see some people who are willing to take on a lot of
Hmm.
work
Yeah.
that, maybe I wouldn't take on. It can be a lot. But yeah, I do think that there is potential there for more people to look at this program and use it. And they have to know about it. And with the properties that are out there, I mean, we know Halifax has a lot of older homes. So there is a lot of work to be done. And even if you're not looking to do this for a secondary suite, like we're kind of focusing on that. But let's just say, somebody's seen maybe a rundown property for whatever reason, or the septic field is gone. That is a property that we could look at doing this program for. and you put that little bit of money into it and get it updated, I mean, you would be able to tell the client what the new value would be.
Right. And yeah, like you said, we've been kind of focusing on the secondary suites, but I mean, the Mortgage Plus Improvement Program is for everything. You know, cosmetics. Where was that other program that you showed me here?
Yeah,
You know, if it's cosmetics, roofing, flooring, windows, switching out heating systems to heat pumps, you know, things like that. So that, you know, we are limiting ourselves a little bit in our conversation, but we do want to make sure everybody knows, you know, the Mortgage Plus Improvement is not just for the secondary suites, but if you see something potential in a house that just needs a little cosmetic fixes, and then we can actually value your house after those fixes are done, and you know, we all know it's going to improve in this market.
absolutely. I mean, and the thing is renovations are so expensive right now that it would be a lot for somebody to take on a new mortgage. You know, you have a new payment, new bills, property taxes, and then you're gonna add on costs of renovation. So I think the good thing about it is that people kind of know upfront of, okay, if I get these quotes, this is what it's going to cost me. And they know at the end of the day, you know, after the 6 months, what their payment is going to be, and it will work for them. As a realtor, I know that, you know, you've probably gone into some homes and they still have that green kitchen or green bathroom with the green toilet, the green bathtub, the green sink. And, you know, it's just not everybody loves that Kermity feel these days. You know, a bathroom renovation is like $20,000. So this would be a great program. Feel that some people don't use it as much because it does scare them to have to go get the quotes and do the work that they say they're going to because it's a very short time. You're buying a house and then you're trying to commit to all these renovations. But if you're looking at a property online that it's maybe sat there that you think I could get a deal and you can really look at that and go look the property a few times, that's the property that you want to get the quotes on and see what can I do to improve this.
Right. And we are seeing our average days on market go up right now. Um, and I mean, I've seen properties under 500K asking price that are sat on the market for over 100 days.
Wow.
And
Is there something wrong with the property or?
well, the one particular I'm thinking of, it was the basement was half finished. Um, the upstairs was renovated already, but there was definitely still some improvements needed. So that's one property I had in mind that, you know, this program would be ideal for because there's probably only, I mean, it also needed a new roof. So you're looking probably 40K in improvements, but that probably would have increased the value by an extra 20 once it was all complete. Because now you have a full basement, full bathroom down there, and a new roof, which is going to last, you know, roughly 10 years on average. So that's one less thing you have to worry about. And if it's all tied into your mortgage payment over, you know, and you live there for 10 years versus having to pay your credit cards, interest rates or line of credit, sorry. I mean, it's kind of, it makes sense to me. And I mean, we've had these conversations. I've had many buyers that over my years, I've been this 18 years, I've had many buyers walk into a property and just because of the paint color, they're like, "No, not for me." I'm like, "Well, that's an easy fix," you know, and I've had many conversations about that with people and, you know, either getting the line of credit and doing it after or looking into this Mortgage Plus Improvement Program and getting that money in those draws so that it's not coming out of their pocket in a sense right away, but they can plan, right? And that's the biggest thing, especially first time home buyers. If you rush them, they're not going to be comfortable. But if we can set out and lay out a plan with them between myself and their mortgage specialist, it makes it much smoother for them and they can see the potential and the long term benefits of having this house and having this mortgage plus improvement program to help them pay for it.
Absolutely. I mean, you know, you see it, I see it. We have some clients that want move-in ready homes. They don't want to have to paint
Yes.
the wall. They just want to move in and that's not their thing and that's okay. But there are lots of people who do want to, put some sweat equity into a property as well. And, they don't have the big budgets to go buy that fancy brand new house. But with this program, and the more we educate people to let them know that this is available, I can see more people saying, you know what? Me and my best friend here, we're both renting. We
Hmm.
live close to each other. Why wouldn't we buy a house together and we can have our own separate units and, be investing in ourselves? So I think by doing this podcast, that's what we're hoping to achieve is, for those people to hear that there are options and this is something that you can do. It does take work. You need to know what you're doing. You need those quotes. But yeah, it can definitely be a great program for someone.
Yeah, and also like you mentioned, like I've seen it, you've seen it. We've had. I know I've had friends that have purchased properties together. Um, the big thing there too is making sure that you have a lawyer involved so that you guys have an agreement for your exit plan of purchasing that house together too. So that's
Absolutely.
something else that we'll probably should dive into another point, but that is something I do want to make sure you need to
Mhm.
have an exit plan if you're going to be doing that. Versus the multi-generational house. If you're buying a house and your parents are going to be moving in with you, that's different. But even then, you're still going to need an exit plan. I had clients that I sold their house and their parents' house separately. They ended up buying a house as a family that ended up having actually 3 units, because there was the two main families, each got a unit, and then another family member moved into the other apartment, which was ideal for them. I know they did look into mortgage plus improvements because the property did need some updates as well. So that was it worked out really well for them. They were able to get into a house. They were able to get all their family under kind of one roof, but have separation. And they were still able to do their improvements that they needed,
Yeah. Yeah.
which
It
is it's ideal.
definitely, yeah, you make such a great point with the exit strategy. That's what if you're getting into it with anyone, other than just yourself or maybe your spouse, you do want to have a plan of how that would work.
Yeah,
If you were to separate, even if you're not married and you're going to buy a place together, you may have a cohabitation agreement in place, depending on who put money up towards a down payment. Maybe there's gift from family, things like that can go into play. Um, but yeah, I think more people need to look at using this program, um,
definitely.
especially in Nova Scotia and some of our even on the outskirts of HRN too. There's lots of properties that just have so much potential.
Very. Yeah, I 100% agree there. And we are, again, we're noticing buyers are having to go a little further outside city limits now, which is it's good. I mean, get those rural communities built up as well. But definitely those properties are in need of work more than, say, the ones in the city. Not in saying all in the city are perfect, but those ones, typically are maybe in the 30 to 50-year age range, where in the city, a lot of the communities, you're looking under 35-year-old houses, a lot of areas, unless you're in the peninsula of Halifax, but you're looking at some 100-year-old houses. Taking your money and a lower payment for a house outside of Halifax, but then putting a little bit of money into it and making it what you want makes sense to me.
Exactly. Yeah, and I mean, and the city's growing. Like, as we
Very.
know before, Lower Sackville used to be so far. Oh, well, now it's
Yeah.
not. Now Enfield is the new, outskirts.
I
So
just
for
had
anyone,
Enfield in my head. I was just out in Enfield on the weekend, and the amount of new construction going up out there is absolutely nuts. It's amazing, and it's so convenient to get into the city. Enfield right onto the highway, and you're in the city in no time. So I know a lot of people that are starting to move that way. I've even had clients and know people that live in the Windsor and Truro type areas, but work in Halifax.
Absolutely.
Um, and again, they've some of them have just gone because of the price, but some of them have gone because of the price and the potential of the property. And they've looked at these programs, the Mortgage Plus improvements. So it is our real estate market is evolving. It's changing drastically, and it's going to continue to, especially with this low inventories that we're still dealing with in HRM and outside HRM. Um, People have to look at other options. They're not always going to get those new constructions, move-in ready homes. But there is so much potential in some of these older homes that just need some love and some money put into them to bring them back to get back to life and modernized, right?
And not everybody wants to live in, a lot of people will get apartments together. So you're in this tiny little apartment together. Why not get a house where you can have your own space, and build equity? So
Yeah,
and
exactly. And that's the thing. I mean, the other side of the coin is the price of rent. You get a smaller house, your mortgage payment could be less than what you're paying in rent. Or, I mean, you'll get more square footage in that small house than you do in your little box apart.
exactly. And I mean, you take rent, just think of it, rent for 5 years, how much money
Oh
that's
yeah,
gone. Like,
yeah.
you know, do you want that gone to someone else, or would you like it invested in yourself?
So we kind of mentioned, I'm going to lead us in towards the kind of the end of this type of situation with the mortgage plus improvements, and we talked about exit plans with, the cohabitation and stuff. Say somebody bought this house, they've been in it for that 5 years, they've done all their renovations, so all their draws have been paid out, everything's good. Now they're in year six, or sorry, they're in year five, about to refinance. How is that going to affect things?
Well, their mortgage will come up for renewal, and they have options just like everyone else. So if their current lender isn't offering them a great rate, they can look at switching elsewhere. If they potentially need to add on money to refinance their mortgage, maybe they need to pay out some debts or do some other renovations, they can look at doing that as well at the 5-year mark. Or let's say they decide that, you know what, they're not happy there. They want to move to another place. So they're going to call you to, I want to start house shopping. Well, a lot of people think that they need to have 20% down to go buy that next house, but they
Uh-huh.
don't. They could potentially keep that house, have it rent both of those units rented out, and then they could go buy a new property with 5% down.
That's another exit plan I've talked to about with many people.
Definitely.
And that's the other thing. Like this is a nice way for people to get into the market, make those improvements that they need to do, but also potentially, create that revenue down the road, right? Because they're not pulling money out of their pocket to do those renovations. It's going to be in their mortgage, and eventually, if they are creating two units, or they've bought a multi-unit, they are potentially going to be able to move out of that and rent it, and then have the long-term income coming from that.
Exactly. Yep. Yep. To help them maybe with maybe it's not their forever home, the first home that they buy. They buy it with somebody, just so that they can own property. Because we know in the rental market these days, there's not a lot of security. People have had to move if they're renting from someone and they decide to list their property, or they want to have somebody else move in, a family member, then, you're evicted. This Having your own place gives you that peace of mind.
Peace of mind, freedom,
Yeah.
lots of different
And to
things
be able
there
to
for
do some
sure.
changes too, if you want to paint the wall, if you want a blue wall or a black wall, whatever you want, you can do. If you
That's
want to have
right.
pets.
All right. So as we come to a close, I do have, in your experience as a broker, um, what do you feel is the biggest mistake buyers make before speaking to a broker like yourself?
Oh, that's a great question. One of the biggest mistakes I see people do is they'll go online, to these apps and put in their income and their debts. And they're like, and some of these places will spit out a pre approval certificate. and they'll think, "Yay, I am pre-approved for this amount," and they go out and they start shopping, and then they put in their first offer, and then I get a call from a realtor because they're like, "Yeah, they're not getting approved for this amount that they say that." So, what I would say is do not consider yourself pre approved unless you have spoken to somebody, they've pulled your credit, and you have provided them with documents on your income. And if you have not done that, you are not pre approved. And the benefit of speaking with a broker is that we're going to look at things all different ways. So when somebody submits, an application to me, I say, I'll ask them, like, what's your budget? What's your goals? Get them to tell me what they want and how they would like to see it. But then I will also say, okay, have you thought about this situation where maybe you pay off these debts, frees up cash flow? Maybe we go use a Nova Scotia down payment assistance program, borrow the down payment. We've just allowed you to qualify for a higher amount, and you'll have less debt at the end of the day. So the biggest mistake is, again, not getting fully pre approved or speaking to just one lender. When I say that, I mean like just a bank, for example. They only have their products and what's available to them, and they're going to coach you for that. Whereas a broker has, up to 30 different lenders available to them, many different solutions. So you're not limited. So I would say definitely, speaking to a broker. And I can say that because I worked at the bank and I've worked as a broker and I know where I have more options.
Yeah, that's one thing you can speak from is, you've been on both sides of that coin, and
Yeah,
it's something I know early in my career, I was always pushing people to the big banks. But then as I learned, and I mean, that was again one of my old mentors that was focused that way. But as I learned, like people need options. And even if it's just a conversation, at least by having those conversations with people like yourself, you can help educate them, and maybe one product isn't the right product for them, but because you're a broker and you have multiple things that you can offer, they see these other options, which, like, we've been talking about the Mortgage Plus improvements. I've many buyers that I've talked to that have gone to a competitor, and they've never talked about Mortgage Plus improvement.
exactly. Yeah. And sometimes, you get into situations where people don't have the experience either. You're walking into a place that you don't know how long the person has been there. You don't get a sign
Right.
like at Walmart that said they've been there for 5 years or whatever to kind of get an idea. So, sometimes people can get wrong information. So it's important to discuss it with somebody who knows what they're doing so that you get all your options.
And that's the thing, and that's why, us as realtors too is we don't just give usually one name out because it's not by law or anything, but it's just by best practices. We try to give multiple names to different contacts, whether it's a roofer, inspector, a mortgage broker, because there's not one solution for everybody. Well, that is great. Anything else that the potential buyers really should know, like is very important, like, other than speaking, like, to somebody like yourself to look at all the options, but if they're looking at those Mortgage Plus improvements, what's, the big takeaway that you wanna make sure everybody is aware of with that program?
Definitely just the potential of
Mhm.
having that secondary suite of how that can help you with your income, especially if you're somebody who's really focused on a budget, and you're concerned about, the payments and stuff. So it would definitely be for that. The other thing I just want to mention is that it's not limited to a certain group of people. Like if you are new to Canada, you can qualify for this program. If you're buying an investment property or a second home, a cottage, you could also use this.
Yeah, I was just looking at your sheet there, like, eligible, stated income, new to Canada, vacation secondary homes, investment properties, it's unlimited, like you said, so it's definitely it's worth a conversation to have, either whoever you're working with as a buyer, um, you know, I pretty sure all the big banks offer this as well, but it's just not something they always talk about, right?
That's right. And when people are getting a mortgage, the biggest question, everybody's so focused, what's the best rate? What's the best rate? And,
Yeah,
you know,
yeah.
that is the one thing where if you're just asking that question to someone, what's your best rate? Well, they're going to give you an answer with the best rate. But what you want to have is a real conversation that says, what's the actual best program for you? I could be talking to someone, and I could hear them say all of these things. Well, me and my sister, we've been looking for a home. We haven't found this. And we want to stick to this budget amount. And they're just focused on the rate, but this
Mhm.
program actually at the end of the day might help you and achieve your goals. So you need to talk to the person who's asking all of those questions as well. Why you're trying to stick to a certain budget or what's going on exactly. Because some people are, they have thoughts and they're set in their ways. However, they hear about different options, different programs, and it opens up their way of thinking.
Well, that's wonderful. I think we covered all the bases anyways. I mean, the big thing now is, if people have further questions, definitely reach out to if they're working with an existing mortgage broker, and if you're not, reach out to Danielle, and make sure that you get all your questions because answered. If you're if you're a current buyer right now in the HRM market and you're struggling to find a home that checks all the boxes, then maybe we need to look at those houses again, but with the knowledge about Mortgage Plus improvements. So I think that would be the big thing too for a lot of buyers is they do have a narrow look, and sometimes we need to broaden their view and talk about things like this. And if they've gone into a house that they said no the first time, well, with this knowledge, we walk back through that house, it might change things for them.
Absolutely. Yeah. So, yeah, if anybody has questions, please reach out. If you are already working with an existing mortgage broker, I'm sure they will have the information for you on the program.
Excellent. All right, so we'll wrap things up here today. I want to thank you for your time, Danielle, and helping us, talk about this Mortgage Plus improvements. And, like we said, we focused on secondary suites, but we weren't limiting it really to the secondary suites. We want to make sure that everybody knows that this Mortgage Plus improvement program can help all their needs, potential buyers, whether it's simple cosmetic fixes or those major septic roofs, windows, those types of things. So give us a shout out, Danielle. Where can we find you online? And are you active on socials, or do you just want people to find you on email?
You know what? Email is the best way to reach me, communication wise. You can find me on Facebook. I do have a business page. You can check out my Google reviews. I have that as well. And I do have websites. So if you just Google my name, you will find me. And it's Hardy with the IE.
Yeah, we'll make sure I'll link you in the description as well. I'll put some information to get your contact information there. So again, thank you, Danielle, and thank you, everybody. This is my first mini pod, and we're hoping to do more of this as we continue. So thanks again for joining us at the Community Game Plan. Make sure you like, follow, share, do all those fun things. Give us thumbs up on YouTube. You can find myself and Jim Smartin and the real estate team all across social media, and we'll make sure that we get this going and continue to try and bring more education to our community because that's what the Community Game Plan is all about. So thank you again, and enjoy the rest of your day. Have a great day.
Thanks so much, Eric.